Hello and good morning, listeners. Welcome back to Almus Market Mornings, your daily dose of global financial updates. I'm your host, Swaraj Rajagopal, and we have got you covered on everything from currency shifts to pivotal central bank decisions and important speeches. Plus, you'll gain expert analysis on macroeconomic data that's shaping the market narrative right now. Join us for this episode and navigate the markets with confidence. The ISM data released in the US regarding the services sector fell by the most in 4 years. The number indicates the health of the services side of the economy, and a weaker number indicates a slowdown. The reaction was, of course, dollar lower across the board. Apart from this, the game of politics is afoot, and the UK polls indicating a landslide win for the Labour Party. Now, the election is being held today, so that's an important point to note. Good morning, JK. Did the weaker ISM data provide some sort of comfort for the rate cut betters? What's your take?
Hey, good morning. Yes, I think the whole host of data that we saw yesterday were weak from the US economy. And that actually led to market pricing in 71% odds of a quarter point cut by Fed in September, up from 65% before the release. And also the markets are now seeing 69% odds of 2 quarter point cut by the end of this year. Uh, as we recall, the Fed in their recent dot plot had indicated only one rate cut. And so, the numbers that we have seen this week are overall on the weaker side. And particularly on the employment side, we had higher jobless claims. We had the ISM services as well as the manufacturing showing lower employment index. Of course, the job opening numbers were higher, but again, that was not showing much progress if you consider the average of the last 6 months, and job openings were still closer to what we had seen during the pandemic. So ADP number, of course, was much lower. Now, some analysts say that looking at the employment index in the manufacturing as well as on the services side, the non-farm payroll on Friday can actually be on the negative side. So, but that's one extreme assessment. We might well have the number that is expected at 190,000, but again, the non-farm payrolls include a lot of part-time workers. So it's not really indicative of where the economy is head, in terms of the job market. But definitely, job market is cooling, and that has been recognized even in the Fed minutes that was released yesterday. Vast majority of members actually recognized that the economy is showing a slowdown. While they are not committing to any particular path of interest rate, and minority of members actually point to if the economy overheating or inflation going up, they may actually prefer a rate hike as well. But on the whole, there is a certain shift that people in the committee are looking at economy cooling off, and Fed wanting to be attentive to that. And while Fed is focused on inflation, they are also keen to see that economy does not slip into a recession. So assessment is that these data numbers can actually lead to a rate cut in September being more certain. And let's remember that all the inflation numbers this month, PCE, CPI, and also the PPI, all of them came much lower, and there was no price shift to the higher side as far as the CPI and the PCE numbers are concerned. But if you look at the dollar's reaction, yes, it did weaken, but not as much as one would have expected after seeing this stream of weak data as well as the fall in the yields that we saw yesterday. That's because the other side, you have the politics that's playing out. European elections ahead, second round on the French elections ahead on Sunday, the second round. Most probably, it looked like there will be a hung parliament in France that will lead to a policy paralysis there. And then we have also the Japanese investors, or rather the global investors, actually continuing to sell in and buy the dollar because of the differential with the dollar being very attractive for them to continue the carry trade. And geopolitical tensions are not going away, and particularly on the Middle East side, which is also supporting the oil prices. And let's also remember that the higher oil prices may eventually lead to CPI numbers being shifted higher in the coming month as well. So all in all, we have had weakness in the dollar, but not as much as one would have expected to see. And in fact, the EM currencies have been holding up well. In fact, we can differentiate, in the dollar pack. Euro is moderately stronger compared to what it was a week back. And then yen continues to weaken. Chinese yuan continues to weaken. Both of them are very low yielding currencies. The currencies that are actually gaining are the high yielders, like Australian dollar and the Canadian dollar, which are also the commodity based. So there is a divergence in the dollar performance overall. But if the certainty on the Fed rate cuts in September increases, I think we definitely will have some more weakness in the dollar towards 104.5, currently trading at 105.20, but that still keeps it in a broad range, and we need something much bigger for the dollar to even go out of the current broad range. As far as the rupee is concerned, it traded on the weaker side yesterday. Lots of outflows heard, at the same time supplied by the central bank as well. So it was kept in a very narrow range. Once again, not much reaction in offshore for these weak numbers from US. So we continue to trade the narrow range. Today being a New York holiday, might not have much of a buying support for the dollar, but overall the range in rupee continues in the 35-55 band. So yes, we have UK elections today. Result is almost like a foregone conclusion, like Labour Party to come with a very good majority. But what will hold the eye is the French elections on the weekend, and also slowly gaining more and more attention is the US election scenario, where the Trump camp has gained a much bigger advantage after the latest presidential debate. And also there were rumors that either Biden might be withdrawing from from contesting the election, but then that has been denied. But it's a very that's going to be the center of attention for the markets, because let's remember that if the Republicans come, I think inflation is going to be once again up. So that keeps the dollar also higher, and probably the interest rates also not so lower as market would desire. Thank you.
Thank you, JK. And of course, the theme has been the US economy data being weaker. Even on the employment side, higher jobless claims, ISS services and manufacturing showing a lower employment index. So all of this is indicating somewhat of a slowdown in the labor market, which even found a highlight in the Fed minutes. Even they are cognizant of the job market slowdown. So that's something markets would be closely tracking. Now the odds for the rate cut, 71% odds for a rate cut in September. So it's up from 65, and a total 69% probability of 2 rate cuts this year. Just to highlight, the Fed dot plot had indicated 1 rate cut this year. Of course, the dollar weakened, but not as much. And for rupee, we traded on the weaker side, but it was contained well by the central bank. That's it from us today. Thanks for listening. Tune in tomorrow for the latest in the financial markets.